Hi everyone, welcome to Your Value. So today we're going to look at Coinbase. Why is this stock not flying? Well, because it's the certain way it's listed onto the market. Unlike a traditional IPO where it raises money, insider shares are locked up, so a massive flood of shares don't end up on the market. The problem is they chose a direct listing. Direct listings tend to have no lockup periods. Unlike Palantir where they did have a lockup period, but even that didn't really help that much. And I think it's just really attributed to just the way they're listed. There was a lot of hype, but I don't think it really came through enough. So I think this chart summarizes it in a really nice way. Like we've got Asana, Palantir, Slack, Spotify, and you can see in the first week in this chart, most stocks don't really outperform. They just don't get sold down because with a direct listing, you don't really have as much demand as you would on a traditional IPO, because they haven't really gone out there to sell every institution about what this company does, why it's exciting. You'd think a lot of people know these companies, but at the end of the day, like there's just really isn't that demand for it initially. But within time, things generally get a lot better for these companies. As you can kind of see, like if we look at Palantir, I think Palantir was a real good classic example that, hey, this company when it came onto the markets, it was like $10, $11, then it just like sunk to like $9, and I was kind of I was looking at this company, I was like, why is this trading so lowly? Like I couldn't even understand it for a very, very long time. And then when they started producing those financial results, that's when the share price really got moving, and as you can see, by $23 now. And you imagine like around October last year it was selling $9. It did go to a high of like $35, so it kind of shows you like the minute those financial results come out, that's when the game changer kind of happens. Like you could say like Coinbase did release their first quarter results, but I think everyone's waiting for a bit more consistency. So I think there's a high dependency on that second quarter result to just provide a bit more consistency, because they have just grown their first quarter revenues by like over 800%, which is insane. So I think there's a little uncertainty in the market. A lot of institutions have not hopped into this company yet. A lot of people just don't know how to justify the valuations. And hence why it's at like $60 billion, where I think it actually can be at a much higher valuation than $60 billion. So yeah, like it's certainly interesting how this has gone. You know, in a way it's kind of expected. Like most direct listings do not really outperform in the way you expect. So the biggest question is, why would you go with a direct listing if they never really perform too well? Generally it's just like people in the company just trying to get out of the company. They're not interested in raising money. Like Coinbase is earning such good profits. They really don't have to raise money, so that's the truth of it. And a direct listing is just a good way for them to allow their employees or the management to sell down in their shares, and also to just get a valuation for the company as well. And maybe also in the future, if they did need to raise money, they've already got everything set up. But generally with direct listing, it's just for a good sell down for everyone. If you're an employee, you got stock options, there's not really any place to sell it. So it's just a really good way for people just to sell down shares. Hence why direct listings don't generally do that well when they open initially. And it does rely heavily on the performance of the company. If the company can't perform, then obviously the share price won't come up. But I think Coinbase is one of those companies that's showing some really good performances. And as crypto continues to do well, I think Coinbase will also do well. So yeah, I think I suspect the share price will get a good boost later on. Like there's no certainty when. I'd say either soon or maybe when the second quarter report comes out, which could be many months later. It just comes down to patience. At the end of the day, you've got the patience. You can ride out the volatility of the share price. I think $60 billion is awfully cheap for this company. So yeah, I think it's it's a good situation to be buying in, but again, you don't really have a market that's looking at this company and going, we really want to buy these shares in such a high demand to match the amount of sellers. So I think you need to wait for the amount of sellers to get out of the market, because at the end of the day, there's a lot of people selling selling the stock from the company, and there's also a lot of traders. The minute you get this situation, you have a lot of people trading the stock as well. So it gets in a very volatile pattern where it's stuck between certain pricing limits. And then it's just a matter of, I think once those second quarter results come out and are really good, then I think that helps re-rate the company. But if the results aren't good, then I guess it does validate the pricing of the company. If people had their concerns that, hey, all of a sudden your first quarter result was really good, but it might not give us the confidence to value the company in a high way until we see further results. So yeah, I think it's always interesting, especially how direct listings are compared to other type of listings. So I think it's a really good lesson that in the future, if you come across a direct listing, maybe you don't really want to pay up front in all senses for a company where there's probably more sellers than buyers. And I think it's really shown in Coinbase, and it's shown in these 4 big companies. These are not tiny companies like Asana, Palantir, Slack, Spotify. They're not tiny companies. They're very, very well known. And if they came onto the market and they did not perform well, it just really just highlights the weakness of doing a direct listing. Like, sure, your price might be hyped up, but at the same time, it just allows people in the company to just exit some of their positions, particularly the employees. And yeah, I think that's pretty fair. At the end of the day, like, it is what it is. You don't kind of like look at it as in, oh, the share price didn't do well immediately, so it's a bad company, or a bad stock, or not worth investing in. It's a matter of actually your gauge of company valuations. So like when they do direct listings, there's a lot of pressure, and I think Palantir was just the best example around this. That, hey, there's a company that is really good at what it does, but not a lot of people understand it, or there's not a lot of demand for it, and some people are on the sidelines waiting because they're not too sure if the value is actually justified. The pricing might seem high. Like, for some reason, some people look at pricing on a dollar term basis, where it's actually the market valuation you should always be considering. So like, if someone's looking at Palantir and they're like, oh, that's $23, and we've got Coinbase at $322, $322 might scare a lot of people. But yeah, at the end of the day, it just comes down to market valuation. And for a company that was talked about to be worth well in well in excess of $100 billion, it certainly hasn't performed to that extent with the current share price, which I kind of think is a really good opportunity for other investors to actually start investing into the company if they like this space. But of course, the share price can always continue to go downwards, because until the selling pressure's kind of gone, yeah, at the end of the day, like, the share price could still go down. But I think in the longer term, the share price is going to be worth much more than it is right now. It's a matter of patience. It's a matter of also, I guess crypto just had a bit of a sell down recently. So I guess you got to wait for the excitement of it to come back up again, which has a high influence on Coinbase as well. So just a lot of things that probably hasn't aligned exactly. Like, they're still performing relatively well. Like, I mean, their opening pricing was set about $250, but that was just like a benchmark rather than any raising price. And it's at 322, so it's above what they benchmarked the pricing at. But still, at the end of the day, like, I think this company is going to probably trade much higher, in excess of $500 for sure. But of course, that's just my opinion and my analysis of company valuations. Yeah, like when I was buying into like Palantir really early on, I couldn't explain why why it was at $9 and $10. I kind of thought this was at least a $20 company. But it just turned out you just had to wait. So it's a matter of that whole situation of like, the market can remain irrational, rather than you can remain solvent. So yeah, like I think if you buy into this situation, you got to be prepared that hey, you might have to hold for a while longer. But once things come good, they really come good. So it's a matter of yeah, just buy, hold, wait. Only if you have the confidence in the company, of course. Some of you guys might feel like it's highly valued, it's not worth it, then yeah, I mean that's really fine as well. Everyone has their different perspectives, their way of valuing companies. My valuation, yeah, definitely sees this well over 100 billion. But of course they have to perform in accordance with their first quarter report, where they managed to get several hundred, percentage gains on prior years, which is quite extraordinary. But of course they have to continue that. If it was a one-off performance, then I guess yeah, like the justification isn't there. But if they can continue that strength in their kind of revenues and their net profits, then yeah, I think it's pretty good. So yeah, like I think at the end of the day, like it's just a matter of how they listed. Direct listings just tend to come with a lot of selling pressure, and that's just the reality. Yeah, so let me know if you've got any questions or comments. Until then, good luck investing, everyone.